So if you're relatively new to trading or you're a seasoned veteran and you still haven't found a nice and simple strategy, well then you've come to the right place, because in this video we're going to go over one of the simplest possible strategies that makes a lot of sense and you can start implementing as soon as today. So to understand this strategy, we have to understand the basics of market structure. So right here we have exactly that, the basics of market structure. So right here we have an uptrend, and here we have a downtrend. And you may have seen this already, but we're going to go over it one more time just to get it really stuck into your head. So here, the uptrend, we see we have a high and a low, and we have a higher high and a higher low, and then we have a higher high. All right, and we're going to divide this into the uptrend and the downtrend. So an uptrend, we need to define what an uptrend is. Well, the definition of an uptrend, in order for price to move upwards, price has to be making higher highs and higher lows. Because if price was making lower lows, then we couldn't say price is moving upwards, right? So in order for price to move up, we have to be making higher lows, and we have to be breaking out into new highs, because we can't go higher without breaking older highs. So as you can see right here, we have a higher high, higher low, higher high. Okay, so it goes high, higher low, higher high, higher low, higher high. Now, what is the definition of a downtrend? Well, it's the exact opposite. In order for price to move down, we need to have lower lows, lower highs, lower low, lower high. So we go from a low to a lower low, or a lower high, sorry, then a lower low, because in order for price to move down, we have to break past lows, right? And then we have the lower high, and then break down to a lower low. So with this in mind, we now have the ability to identify an uptrend and a downtrend. Now, you may be thinking, why is this important? Well, you won't be able to tell whether you should be buying or selling unless you can get this very basic definition identified as soon as possible. You have to be able to identify if price is moving up or if price is moving down. And this is the simplest way to, by definition, identify whether price is moving up or down. So what can we do with this theory? The theory that higher highs must be made and higher lows must be made in an uptrend, and lower lows must be made and lower highs must be made in a downtrend. Well, it allows us to come up with a very simple strategy. Now let's just jump into that right now. So for the uptrend, we're going to be using a buying strategy. We're going to buy on an uptrend. Now, what do we know? We know that in an uptrend, we have to be seeing higher lows. But what does that do for us as a trader? It tells us that we have an opportunity of buying into this uptrend, expecting a higher high to be made off of a higher low. So here is the very basic strategy. You are going to take a Fibonacci retracement tool. Now, this is not professional financial advice. This strategy is horrible. Don't use it in your real trading, right? Just get that disclaimer out of the way. I am not a professional advisor, and you are responsible for all losses or gains made in the market. So, now let's get into it. We have the Fibonacci retracement tool on TradingView. It looks like that. We are going to take from the low to the high after a high has been broken. Okay, this is how we identify that a trend is being made. After a high has been broken, we are going to take our Fibonacci retracement tool from the low to the new high, and we are going to buy anywhere in between the 50 and the 61.8 level. Let me get rid of this. We are going to buy between the 50 and the 61.8 level right here. So that is going to be where we are buying. Now, we are buying in an expectation that price is going to make a higher high. Now, how do we target what exactly will define a higher high? Well, it's a very simple thing. Let me just get rid of that here. If we bought on this pullback, the way we get our target now is by simply copying and pasting a line from the previous low from the most recent low to the most recent high and projecting it forward. And now this point right here, we would draw a line. This now becomes our target. And where will our stop go? Well, we only want to get out of this trade if this becomes a downtrend, if this trend is invalidated. So when do we know when this trend is going to be invalidated? Well, an uptrend can only become a downtrend if new lows are made. So our stop loss, buying here, our stop loss, okay, represented by this red area here, is going to go below this low, as you can see, below this low here, and our target is going to go towards this line up here, which is it's called the ABCD pattern, but let's just call it an equal move higher. So we are targeting an equal move higher. We are buying between the 50 and the 61.8 Fibonacci retracement tool, and our stop loss is going to go below this low. Okay, so that is the uptrend buying a pullback strategy. Very simple. So in a downtrend, what are we going to do? We are going to do the exact same thing, just upside down. We make a lower low. So what we do is we take our Fibonacci retracement tool and we go from the most recent high down to the most recent low with our Fibonacci retracement tool. And now we are going to short anywhere between the 50 and 61.8 Fibonacci retracement. And how do we know that this is going to remain in a downtrend? Is if it does not break its previous high. Because if it were to break this previous high, this would become an uptrend by definition. We would have a new high and we would be in the process of creating an uptrend. So our entry is going to be here. Our stop loss is going to be above this high. And our target is going to be an equal move. If we were just to get rid of this, our target is going to be an equal move to the downside right here. So we would put a line at the completion of this right here. Our entry is right around there, stop above the high, and our target is going to be right down there at the equal move level. So what you can see here is that we are constantly buying pullbacks and only getting out of the position once the downtrend or uptrend has reversed into the opposite trend. So now let's take a look at some real examples of this. So here we are looking at the US dollar, Canadian dollar Forex chart on the 1 hour time frame. You can see we have clearly made new highs right here. Now we're going to take our Fibonacci retracement tool. We're going to go from the low to the high. And unfortunately, there was not any sort of trade opportunity here because we did not get down to our 50 to 61.8 buying area. So now we move on. Now let's just chart this out. We have a high, a higher low, and now we have a higher high right here. Okay, so we are going to we now know that this is an uptrend and we are expecting a higher high. So what do we do here? We take our Fibonacci retracement tool, we go from the low to the high, and our buying zone is going to be between the 50 and 61.8 retracement. And now let's see what price does here. You can see now that we were going to target, we got our retracement, we formed a higher high. Let's create our little buying position here. Our stop is below this low. Our target is going to be an equal move to the upside. Now let's use the bar replay here. Give me 1 second. Okay, so we now have the bar replay here. So we are going to target a equal move to the upside from this leg, right? So we just took this, copied and pasted, put it right there. Now let's see what happens here. Okay, so you could see that this trade worked out pretty well. We got an exact target reached with very little drawdown. We bought into this area right here, expecting a new high and expecting an equal move to the upside. And you see that was a 1.87 risk to reward, so we had a pretty decent risk to reward there, and our target was hit. Now let's erase that. Let's mark it out. We now have our new high. And we are going to, well, actually, it would look something like this, okay, because we have to have the clearest highs and lows, and that is a very clear high, very clear low. So our new high, higher high, would be right here. Okay, so we have a swing high, higher low, higher high, higher low, higher high. What do we expect next? Another higher high. So we're going to take our Fibonacci retracement tool, go from the high to low, or from low to high, sorry. We're going to buy around the 50 and 61.8 Fibonacci retracement levels. And now let's see what happens here. Okay, so we did not get the entry here. Let me just double check that. Yeah, so we came very close, but you can see that we did get that higher low. We got this higher high. And then if we were to go down to a smaller time frame here, this actually probably was a decent trade right here. Very hard to see, but if we just take from this low, right, because we have a new high here, this low to this high, buy at the 50 to 61.8, buy position would have been entered right around here, stop loss below this low, target an equal move to the upside from the most recent swing high, so it would look like this. We would target this. This has to be at the lowest point of the pullback. So the lowest point of the pullback was here. Right here, right? So we take this, we attach it right there, we project it forward. Our target becomes the completion area right here. And you can see that was a pretty decent trade there as well. So you can see that this has a pretty nice win rate, but here is the catch. Of course, this does not win all the time. This is a trend trading strategy. So when the market is consolidating and not trending, okay, because this is a very clear uptrend, it's going to win a lot more in an uptrend or downtrend versus when the market is swinging up and down rapidly, right? When it's just consolidating, obviously you're going to lose more. Okay, you're going to lose at least more often than when you are trading a trending market, because this is a trend strategy. Okay, it will underperform in consolidation periods, but it will perform very well in trending periods. So now let's take a look at a selling or shorting example. Okay, so in this example, we clearly have a new low created right here. We have broken this previous low here. So we now have a downtrend, expected downtrend, from this high point to this low point. We take our Fibonacci retracement tool, we go from the high to the low, and our selling zone is now going to be the 61.8 to 50 area, selling anywhere in there. And we are expecting a new low to be created because we are expecting a downtrend, right? Because we just made a new low, and a new low we expect a lower low or a lower high and then a lower low. So we are going to target a equal move to the downside. And let's see how this performs. We're gonna sell here, stop above the high because that would create an uptrend if it broke that high, and then our equal move to the downside is our target. Okay, we made a new low. Pulled back a little bit here, but we still made a new low, so we expect a lower low now. Still pulling back. And there you have it. We have our target hit. We would now erase everything on the chart here. Okay, now we are going to redraw. We have our lower low, lower high, lower low right here. And now we take our Fibonacci retracement from the high to the low. We look to sell in this area here, and we target a new low. Okay. Forgot to put the position here. Stop above the high, target the new low. We have now created the lower low, right? Part of our downtrend. Let's speed it up here, and there you go, target hit. So as you can see, the trend, the strategy works by trading the trend. You are selling the pullbacks into whatever trend you are trading, and it makes a lot of sense. I know for a lot of you guys, this is probably making a lot of sense to you because it just does, right? You are just buying pullbacks or shorting pullbacks, and you are just targeting a new high or a new low, which is what has to happen by definition, because you are trading the trend, and the only way something can be a trend is if it's making new highs or new lows, right? And this way of just copying the previous move and extending it towards, or sorry, this was messed up here. This would have to be here. This was messed up. All right, let's see if we can hit this, right? We would be targeting, we copy this move and we paste it to the most, to the actual lower high here. And we do, it does look like we hit that. Let's see if we can get down there. We'll call that hitting it, right? I don't want to do this forever, but so we're targeting the that was a great trade. Why is that? Oh, here, that's why. Okay. That we would our stop loss would be above this high, right? Because this is the swing, right? And then our target would be down there. Got it. All right. I was getting a little confused there for a second. So we're just targeting the new highs or new lows, which makes sense because that's what has to happen in these trends. So hopefully you guys enjoyed this video. If you want, you can subscribe, like, and hit the notification, which is the bell icon. That'll notify you whenever I upload. I'm looking to upload around 2 to 3 times a week. If you want, I have a free Discord. You can join. The link will be in the description below, as well as my mentoring program where we have over 150 students in there. It's one of the best programs, I think, in the industry. We have dozens of testimonials, so you can check that out as well. And as always, if you have any questions, you can shoot me a message or leave a comment if you enjoyed this video as well. Make sure to comment, share, whatever, do whatever, right? And have a good day.